What's the difference between the cash and accrual basis of accounting? We'll talk about that in this video. Hi, my name is Katherine. I'm your accounting tutor, and I help accounting majors through graduation and beyond. Every set of accounting books has to be in either accrual basis or in cash basis. Think of it as the background for the set of financials. They both get the job done, but there are reasons a company might want to choose one over another. Accrual basis is the default in accounting classes, so if they don't specify what kind of books they're using, they mean accrual. Accrual basis means we record things as they happen in the real world. For example, if we perform a service for a customer, it lands on the income statement through service revenue on that day, regardless of when we actually get paid for it. Under accrual basis, both cash sales and sales on account through accounts receivable count as service revenue and get recorded on that day. We would credit service revenue and debit either cash or accounts receivable, depending. Under cash basis accounting, we're saying that things don't really happen until cash changes hands. Under cash basis, a service that's performed in cash, we would debit cash and credit service revenue, just like in accrual. If we performed a service that's paid for with the IOU of accounts receivable, we actually don't record it on that day. We wait until we receive the money, however long after that is. Maybe it's tomorrow, next week, next month. Whenever we receive the money, then we debit cash, credit service revenue, so it appears in the books of whatever month we receive the cash. An important note, if we never receive the cash, it never lands on our income statement as revenue. Same for expenses. Under accrual basis, when we make a purchase, it gets recorded on the day we buy it, regardless of whether we paid for it on that day or not. Let's say we hire a company to mow our lawn for us. Under accrual basis, we would debit lawn expense and credit either cash or accounts payable, depending on whether we're paying them today or if we plan to in the near future. Under cash basis, we would only record that expense when money changes hands, debit lawn expense, credit cash, again, regardless of whether that's today, tomorrow, next week. That's when we make that journal entry, when cash actually changes hands. Notice that under cash basis, because revenue and expense only gets recorded on the day cash changes hands, cash basis books don't have accounts receivable or accounts payable. This also means that if we pay for a service before someone performs it for us, or conversely, if we receive money before we perform a service for somebody else, we still record either the revenue or the expense on the day cash changes hands, regardless of whether that's before the service, during the service, or after any point on the timeline. When cash changes hands for expenses or revenues, that's when it gets recorded. Large companies tend to use accrual basis because it's easier to see who you owe money to and who owes money to you, because accrual basis uses the accounts receivable and accounts payable. But also, and probably more importantly, accrual basis is the only version of accounting books that is GAAP compliant. Cash is not compliant with GAAP, and most large companies are required to use GAAP, and so therefore they're required to use the accrual basis, and that's what accounting classes focus on. I used to think that accrual basis books were easier to work with, and honestly, that's probably because 99% of what we're taught in accounting classes, anytime you use cash basis books for one reason or another, they want you to make a conversion to accrual basis. And so I think in my head, I was like, if every time I use cash basis, I have to convert to accrual anyway, then why don't we just do accrual all the time and skip that step? So I really used to think that accrual basis was easier until I got a job where most of the work that I do is with cash basis books. And I can say now, having had experience in it, that cash basis is much simpler because you don't have to worry so much about if there's, the bill for January electricity, we're not going to receive it until early February, and then we pay it in February. Under accrual books, you have to take that amount and you have to accrue for it in January because it's really the January electricity bill. And then you pay it in February, and that's part of the accounts payable. And then your February electricity, you don't actually pay it until March, but you have to accrue for it in February. And there's all these little things that you have to deal with accrual books. Under cash basis books, they just say, you know what, doesn't matter. The bill that I pay for electricity in January, that's the January electricity bill. If I pay a bill in February, that's the February electricity bill. And you don't have to worry about all these little timing differences. And so I can say, having worked in accounting, that cash basis books are actually much simpler. Additionally, accounting software is so advanced these days that even when you use cash basis books, they can still keep track of the accounts receivable and accounts payable for you, so that doesn't get lost in the shuffle. That's it for today. I hope it was helpful. Let me know if you have any questions in the comments, and I'll see you in the next video. Thanks. Bye.